On this edition of INN CEO Talks, I'm joined by Trent Mell of First Cobalt. First Cobalt trades on the TSX Venture Exchange under the symbol FCC. But First Cobalt, and Trent in particular, you've got some pretty exciting news like right now, and then a couple of other bits of news that we want to back up and cover over the last week or so. So let's start with the latest. What's happening right at the moment?
Well, at this very moment, we just announced the financing today. So we've been, in light of our previous couple of catalysts, we've got a lot of people looking to give us money, which is great. After a 2-year bear market, Cobalt's really performed strong. And so we announced a $5 million bought deal. We upsized to 8.5. Expect to close that next week. So the Treasury is looking stronger at exactly the right time.
Well, that's great news, and it comes on the heels of financing that you've received from both the Canadian government and the Ontario government. Tell us about those two tranches of $5 million each. What are they dedicated to, and what's the importance and significance of that backing from both those governments?
Yeah, and the significance, as you say, Stuart, that's, to me, there's a symbolic merit, I guess, of that investment that I really bank with the money itself. So we've been talking to the two levels of government now for about a year, and what was announced in I guess mid December, the day after my birthday, in fact, was a $5 million grant from the Ontario government from what they call the Northern Ontario Heritage Fund. It's the biggest grant they've ever given, and then there's a $5 million 10-year interest-free loan from the federal government in kind as a match from a development fund there as well. So, 10 million towards the capital of our project is very helpful. And then in US dollar terms, we've been talking about 60 million US. So this is 7.5 million now that we're chipping away at. But it really sends a really important message, I think, to our lenders that we're talking to our investors, and to the world. The federal government, with the support of Quebec and Ontario and other provinces, have been on kind of a 2-year mission to try to define what Canada's role is going to be in emissions-free economies. And particularly with respect to the EV supply chain, we're seeing EV investments being made on the assembly side, auto assembly side, Canada and the US, Ford, especially here in Canada. But then there's the whole battery supply chain, right? From the Canadian mines to the assembly jobs in the South. That's where we are. And I think we're trying, as a country, we're trying to stake our ground to that ecosystem. We're one piece of the puzzle, and hopefully that leads to other. I'd love to see a battery maker come to Ontario or Quebec. And so this is part of a bigger strategy.
Well, this is incredibly significant because, as you and I have talked about in the past, cobalt, for the most part, goes from Africa to China. It's not coming to North America as a raw product where it's being processed. It goes to China first. China really is got a lock on that market. And it's really, really important in North America that we have those production facilities here so that we can ensure that we have the supply that we need. Let's talk a little bit about the dynamic of being able to shift the cobalt production into North America. Why is that so fundamentally important, especially when we take a look at tensions between North America and China, and then the latest agreement out of the EU with China, the trade agreement there, how that we need to secure that supply here into North America.
Yeah, so the starting point is geologically, cobalt's just hard to find. You typically don't find it in as a primary deposit. It's a byproduct out of nickel operation, and most of that gets put into the metal market, alloy market for aerospace and things of that nature. And then when you look at battery supply, the chemicals market, that comes out of almost exclusively out of the DRC African copper belt. They make a copper cathode, and then that hydroxide, as you say, 80% of it's going to China. Where does the rest go? There's a little bit to Japan, and a little bit, quite a big chunk goes to Finland as well. Umicore has a refinery. So our strategy is to, it's the same playbook, different continent. Let's do that for North America. The feed is there. We've got our own mining assets that are that need a little love, a little more time, and we've got a refinery that's largely built and permitted. So if we get that up and going, it's responsive to critical minerals initiatives in Canada and in the U.S. We've been to the White House a couple of times. We've got the attention in terms of the mineral assets and the refining. There's the trade war piece, but I'd even add that in the COVID era, it's prompted, it's not just political now, it's prompted supply chains of big industrials like the OEMs to rethink this just-on-time global supply chain that many of us have migrated to. And so localization of a supply chain and building in of sort of domestic redundancies is becoming important. And then you overlay the ESG side, which is another area where we really excel. We're becoming an attractive alternative, I suppose, to some of our peers in China.
Well, the fact that you've got a refinery that really, in many ways, just needs to be turned back on. And I know that sounds simple, and it's more complex than that. But the refinery's already there. As you say, you've got permitting in place. It's a question of having the resources to be able to complete that work, and then to be able to start to develop that product. How close are you to being able to do that? I mean, we talked about the money that has come in from the federal government, other money that you're raising. You still need more money, though, to be able to get to the point where you actually turn the lights on, do you not?
That's correct. Yeah. So we have 60 million US in capital that we require, 7.5 now from the government. You convert today's raise, that's maybe another 5 million from the markets. We've got a silver cobalt transaction in Ontario that'll bring in a few $1,000,000 as well, about 3 or 4 US. So you start chipping away at that. And I've said all along to investors that this is going to be mostly a debt heavy solution. The cash flows from the refinery are quite good. With our long-term prices, we're assuming about 35 million US per annum. So, the rest of the funding package, I think, is going to be primarily, if not exclusively, debt. And so what we needed to do is get, these equity pieces. We were being opportunistic when the government came in, our stock doubled, and we were able to tack on to that. For the lenders, and we've got 5 lenders on it, call it a short list, led by CIBC. They wanted to see the feed contracts, and so that's what we got out just a couple of days ago. Is we're identifying. Candidly, I think we've got the best 2 cobalt hydroxide producers in the world that are going to be providing feed to the refinery. And with that in hand, now we can move forward on the debt piece and try to get that locked down over the next, call it 60 days.
Okay, so you are accelerating the pace in which you're moving towards being able to go to production.
Yeah, we are, and that part of the money coming in today with this raise is exactly that. It's let's get the detailed engineering going and the long lead orders, and I got about 6 months of work that I think we can do before we start construction. And so that is started. That's started already. Frankly, we're negotiating the contract with our EPCM contractor. They're already working for us. We've hired an ex-processing guy from Glencore, Mark Trevisiel, who's going to lead the build out and the commissioning. And so the timeline now, it looks like let's work on the debt. CFO is going to lead that. As I say, hopefully 60 days we pick our lead and get the term sheet, and then we have to document it, which could take a little bit longer. But then we're waiting on permits. So the permits for this facility are all existing, but this ran at 12 tons a day. We're going to take it up to 55. And so there's an amendment process. I think we'll get that by the beginning of summer so that we are in a position to start construction, kind of June, July would be my guess.
And if you're able to do so, when do you think you'll be into production?
So with the feed contracts we signed with Glencore and CMOC, we're contemplating first delivery of feed in October of 2022. Wow. Plus or minus a month or two. So it's a pretty short timeline. You see images of our refinery. The beauty there, and we say there's an 80 million US replacement cost. It's probably higher, and you get the permit. So things can move quickly. And the work, as you say, it almost is just kind of turning it on. We need a crystallizer circuit on the back end to produce the cobalt sulfate to a battery grade spec. But the rest of it is just leach tanks and solvent extraction. So we're adding a second building, but we've got our power lines, we've got our water and our roads, and we got the wet tails. We'll have a dry stack tailing system. So the kind of work required a lot of is engineering and equipment. There's not a lot of earthworks, and there's not a lot of, if I can say it, not a lot of things that can go wrong from the capital side. I've seen big mining projects from my days at Barrick where $1 billion becomes 2 or 3 if you want to look at Pascua Lama, and then 7 or 8 years later. I mean, in this case, we're talking 60 million. It's small capex. It's a small ramp up. The important thing is to get the flow sheet right. And there's nothing novel here. We're going down well-trodden paths to demonstrate the viability of the flow sheet.
And once you are live, what's your production capacity?
Yeah, production's at 55 tons a day of feedstock. We would be producing about 5,000 tons of refined cobalt per annum. And in terms of product to the battery maker, that's the product is the cobalt sulfate. So it's about 25,000 tons of the sulfate product. That's enough for a few 100,000 EVs per year in terms of what we could supply. So call it today roughly kind of 5% of the chemicals market. No reason we can't keep growing from there, but it's a great start, and as the only one in North America, I think it puts us in the pole position both for future expansion, but also I would forecast you'll start to hear us talk a little bit about battery recycling, which is something I think we're well positioned to get into as well.
All right. Well, when we take a look at Tesla's push to expand its battery capacity, along with all other
Yeah.
electrical vehicle manufacturers, and the requirement around being able to have appropriate battery supply, Cobalt then plays a fundamentally important role in being able to meet that transportation or power need.
Yeah, it does. And last year, the conversation shifted more towards nickel, right? Because we are moving to a higher nickel cathode, lower cobalt. Cobalt's not going away. There's narrative out there that we're going to do away with cobalt. It's not coming out. Other than the low end, low range batteries, there is an LFP, a lithium iron phosphate battery that can do it. So let's just, if we can put that aside, cobalt staying in lower quantities, but many more vehicles. The focus was initially where do we get all the nickel? Because if you have a big price swing in nickel, and you got 80 or 90% of the cathode is nickel, you got exposure there. But availability of nickel is not a concern in the world. There's lots of nickel. Cobalt it's the pinch point. It always has been, and there is a renewed focus on that. Where do I get my supply from? And you got the overlay of this is coming from the DRC. So is it ethically sourced? Is there child labor? Where are you getting your feed from? So for me, for my investors, for the lenders, we needed to demonstrate that we're buying from two world-class operations. No traders in between. There's no blending of feedstock. It's going to go from a Glencore mine site, namely the KCC operation. It's going to come from the Tenke operation of CMOC and straight to our door. So we've got ethical feed. We've got reliable, high quality feed. And there should be a good brand around it. I want to brand this as the world's most ethical source of cobalt. So I want First Cobalt to be known as high quality feed that the Western OEMs want to get their hands on.
Well, it's a great position to be in. It helps to secure a North American market. As you say, it is ethically produced and ensures certainty and security in a whole range of different elements in the electrification of the world in which we're living. From your enthusiasm, I can tell that you're very excited about it. Talking to investors right at the moment, what's the opportunity for them when they take a look at First Cobalt?
Well, I think we're knocking off the catalyst, right? We've been very, I think, transparent with where it is we're trying to go. People who follow us closely will probably say I'm a quarter behind. That's on my deliverables. In the midst of a global pandemic, I think we did okay. And so we're coming out of it. We've had three big catalysts in the last month. I've got a few more that I've outlined that are coming. So this is going to start to get exciting. You'll see us sign up the EPCM, get the lenders, get our permits, go to construction. Now, and then what's the overlay? Well, the overlay is Europe EV sales penetrations were up 100% last year, right? In the middle of a pandemic, they became the biggest market, surpassing China. Passenger sales were down by 25%. EV sales were up 107. So now let's turn our attention to the south here. We got a Biden administration coming in, a $2 trillion stimulus plan on a green recovery, and that's the biggest consumer in the market. And more than once in history, the American consumer has pulled the whole world out of recession. So if that starts to turn on south of the border, we're as investors in First Cobalt, I think you're really well positioned. And I'd even add, Stuart, over and above who's in the White House, we're already down that path. Last year there was only 16 models of electric vehicles in America, so not a big selection. I bought a Tesla because that's pretty much all there was that fit my needs. This year there's going to be 39. So you're going to have more than a doubling, irrespective of had Trump or Biden won the election. And you look 5 years out, the projections are 121 models of EVs have been announced for the U.S. market. So it's coming, and it's coming in style here. And the Biden administration is just going to give us a lot more tailwind as we build out our strategy. So our timing is great, I think.
Yeah. So Trent, we had this conversation a year ago about where you were going to be by now, and you pretty much laid out exactly what was going to happen. Your timing, I think, got shifted a bit because of Cobalt, but what you said was going to happen did happen. I'm excited to see what's going to happen as we move forward. What's the thing that has you the most excited in the first quarter of 2021?
Well, I think the response to the government investment was it caught me off guard. Our stock more than doubled in a matter of 2 days, and so I think it was a signal to the investors that okay, yeah, this is real. First Cobalt's got the government backing; they're going to pull this off, and so we've got a lot more eyeballs in the story. A lot of retail investors in the last couple of years, in the dark years when Cobalt was down and out, but Cobalt's gone up. I think it's 12% in the last 10 days. So it's
Wow.
making a slow climb, and you don't see that because Cobalt, the LME quote on Cobalt, not very transparent, and it understates where the market is. It's all on fast markets subscription, so the investor doesn't necessarily see that. But Cobalt's on a tear, and there's a big gap. It's at $18 in Europe. It's at $21 in over $21 in China on a per pound basis. So you have that move. So I'm excited that I guess my instincts and what I'm hearing from Glencore traders and others in the market that things are firming up is consistent with what we're now seeing in the market. So I think this year is going to be another. It's not going to be a doubling of the cobalt price. That wouldn't be healthy anyway. But I think a continual strengthening of the market with maybe a crescendo in the year or two as after we commission. So yeah, some good opportunities for us to make some money and pay down our debt pretty quickly, and then we'll see where we take the company from there.
Pretty exciting for sure. So please promise me that you'll come back in a few months and give us another update, because I think that this is a very, very important sector and need that you're filling. So thank you very much. Thanks for joining me on this episode of INN CEO Talks.
Thank you very much. Have a great day.